Nvidia's plan to issue $20 billion in bonds has caught investors' attention. Most people's first reaction is simple: Nvidia needs money. But Nvidia isn't short on cash. The AI boom has helped the company generate enormous profits over the past few years. So why would one of the market's most profitable companies suddenly raise $20 billion? I think there's a bigger signal behind this move. Hey everyone, I'm Nolan. Over the past 2 years, AI discussions have focused on better models, more powerful chips, and who was leading the AI race. But recently, more tech giants have been expanding investments, building data centers, and increasing spending. That got me thinking, maybe the AI story is changing, and Nvidia's bond offering may be showing us the beginning of that shift. First, I think the most interesting part of this story isn't the size of the bond deal. It's why Nvidia wants the money in the first place. Normally, there's nothing unusual about a company borrowing money. Some companies borrow to expand their business. Some borrow to build new facilities. Others borrow because they need help funding day-to-day operations. But Nvidia doesn't really fit into any of those categories. Over the last few years, demand for AI has exploded, and Nvidia has made an incredible amount of money. Its revenue growth and profitability have been stronger than most companies in the market. In other words, if the goal were simply to keep the business running, Nvidia doesn't look like a company that desperately needs financing. So when a company like this suddenly decides to raise $20 billion, I don't think the most important question is how much money it's borrowing. The real question is what opportunity Nvidia sees that makes it worth preparing this much capital ahead of time. Because when large companies make moves like this, they're often reacting to what they expect to happen over the next several years, not what's happening today. And that's what makes this story interesting. If Nvidia isn't short on cash, this bond offering probably isn't about today's needs. Big companies often raise money because they're preparing for the future. So I'm less interested in how much Nvidia is borrowing. What interests me more is what trend Nvidia sees that makes this move necessary. And to find that answer, we need to look beyond Nvidia and see what's happening across the AI industry. The first chapter was all about compute. Chips, servers, optical networking equipment, data centers, and power infrastructure were the most direct beneficiaries. The second chapter is about distribution and workflow access. If AI can't become part of real-world workflows, whether in software development, office productivity, design, customer service, finance, legal work, or healthcare, it's much harder to turn AI into recurring revenue. And that's what makes Purser important. It suggests that AI application layer businesses are starting to earn the kind of valuations investors once reserved mainly for infrastructure companies. The third chapter will be about profits. Can these AI tools actually charge enough? Will customers keep renewing subscriptions? Can margins remain attractive? Will inference costs eventually eat into profitability? Those are the questions that will ultimately determine whether today's valuations can be justified. For SpaceX, this acquisition strengthens the long-term narrative, but it also raises expectations. The company's story is no longer just about rockets, satellites, and Starlink. It's now expanding into AI models and application layer distribution. But the bigger the story becomes, the more the market will demand proof. That's why I think this Ambit announcement is worth paying attention to. Not because of the company itself, but because it highlights a new demand that's starting to appear across the industry. As AI becomes more deeply integrated into businesses, companies will increasingly care about things they've never had to worry about before. What data can AI access? What actions can it perform? Is it operating within company policies? Because if businesses can't keep AI under control, they won't feel comfortable letting AI handle critical operations. The more important AI becomes inside an organization, the more important these management tools become. In fact, an entirely new category is already starting to emerge. Some people call it agent security. Others call it AI identity or AI access management. The names may be different, but they're all trying to solve the same problem. How do you make sure AI remains secure, controllable, and compliant while becoming more powerful. If a company eventually has dozens or even hundreds of AI agents, managing those agents could become a job of its own. And when enough businesses face the same challenge, a new market usually begins to form. In the past, companies managed employees. In the future, they may also need to manage AI, and that could be the foundation of an entirely new industry. So I don't think the most important part of this story is Ambit. I think it's the shift that this story represents. As more AI systems enter the workplace, the questions the market cares about are starting to change. When AI was just a chatbot, many of these concerns didn't exist. But once AI starts accessing company data, participating in operations, and taking on real responsibilities, identity management, permissions, and activity tracking become essential. And as more companies deploy AI agents, these features may move from optional tools to basic requirements. Because businesses don't just need AI that can work, they need AI that can be managed. And wherever new demands emerge, new opportunities usually follow. When you put it all together, a bigger trend starts to emerge. For the past 2 years, AI has been about building smarter models. But as AI begins doing real work, the focus may start to shift. Businesses may not need smarter AI most. They may need AI they can control. In the past, companies managed employees. Soon, they may need to manage AI too. What do you think? Let me know below. I'm Nolan. See you next time.